So the time then to get in the management of Zensar. We've got Ganesh Natarajan, Vice Chairman and CEO of the company, joining in. Mr. Natarajan, morning. Good to have you with us. Of course, we had the numbers come out post the market hours, and a good set of numbers. The profits rose by about 30%, revenues higher by 17.5%. So split the revenue performance for us in terms of volume and pricing. And do you think that the future growth would largely be led by volumes, or do you expect some improvement?
See, definitely the way we are seeing it is because volume growth has been excellent this quarter. And if you look at the close to 18% revenue growth we've seen, almost 10% is volume led. So I think that's been good. And going forward, I mean, if you look at the growth in all territories, across all verticals, horizontals, it's been good. So I think going forward also it will be robust demand growth. And we are not really factoring in any benefit on currency, though there has been a currency impact in this financial year.
Right, and Mr. Natarajan, also if you could give us a sense of how the Cisco revenues have performed and what's the sense in this particular account?
Well, the account is doing extremely well. As you know, I mean, there was a tough period about 3 quarters back. But right now, I think Cisco is on a great growth trajectory as a company. I think they've got the right products, right services. And because of that, we're doing extremely well. In fact, we got the Best Partner Award about 4 months ago. And it continues to be one of our core accounts. And the good news, of course, is because of our own organic and inorganic growth, the dependence on Cisco is as low as 20%. So I think it's growing well. Other businesses growing well. So I think it's all good at this point of time.
Ranjan, good morning. Neeraj here. Earlier when we had spoken the last time, you had indicated that you would rationalize some of the accounts which are yielding low margins. Have some of them been discontinued in Q3? And if so, was there any impact on revenues or margins because of the same?
We have been rationalizing. In fact, I would think about 12 clients that we worked with last year, we've stopped doing work because it was either insignificant or non-strategic. But I mean, as a contrast to that, we've added 30 new clients this quarter. So I think new clients are coming in, giving good business in our core focus verticals and horizontals. I mean, just to give you a sense, today almost 92% of our business is in the core 4 verticals we chose, and close to 91% from the core geographies. So I think it's been a good strategy. It's played out extremely well. Our integration with Akibia has gone well. So I think the excellent results you're seeing this quarter and hopefully in the future is all a result of, I think, very good verticalization and a very good horizontal integration strategy.
Mr. Natarajan, just wondering if you're confident of crossing the 1600 crore guidance in FY12.
In fact, we're upping our guidance to 1700 crores. So I think definitely we'll do better than 1700. Obviously, if the rupee stays above 50, we'll probably do even better than that. But definitely crossing 1700 crores, whatever the status of exchange is, I think, a surety.
Okay, so 1700 crores, in fact, is what you'd probably cross as well. But what is the sense that you're getting, from the feedback from clients on IT budgets for 2012?
See, I think the expected outcome is that, I mean, obviously we do a lot of, almost 80% of our work is mission critical or what we call lights on computing, application support, large Oracle implementations, and of course IM. So I think that continues to grow. I don't see a problem there at all. There is a doubt on new application development, especially custom built applications. So I think we can expect that to be a little slow, but we have factored that into our growth targets. So I think next year we would find that most of our clients in our own verticals, I mean, obviously we are expecting manufacturing to grow close to 20-25% next year. Retail and insurance may be a little slower, but healthcare is a new vertical, so is transportation. Those will grow extremely well. So I don't see a problem with client budgets for next year, given the kind of focus we have and the kind of services we offer them.
Okay, and how exactly has demand been panning out over your 4 critical verticals, manufacturing, retail, insurance, and the healthcare verticals?
See, retail, you'll have to make it more granular because retail, American retail has had a very good season. So has the Middle East, where places like Dubai, Saudi Arabia continue to grow, which is our key markets. UK has been a little slow in terms of retail, but we've got a number of new clients. In fact, some of the big fashion brands have become clients of ours. So I think we're adding clients at a very, very smart tick. But I think, as I said, the fastest growth vertical of a low base will be healthcare next year, followed by manufacturing, followed by insurance, and followed by retail. Banking is not a very big focus area for us, but I think that will probably grow at about 12-14%.